Hey everybody, today is March 22nd, 2025, and today we're going to talk about the price of Bitcoin, where I see the price of Bitcoin headed for the month of April. Before we begin, please read this disclaimer before you watch this video. You can pause this video as you read it. Okay, so where we left off last time was in late February, and I basically said that it's important for us to hold 90,000, right? And we've been holding it pretty well for the last couple months, right? You saw these wicks down, we held it, and the bulls stepped in, right? And I said that this is important because if we don't hold this 90,000, we're probably going to plunge down to 200-day moving average, this blue line area. And that's bad too, because if we're not able to hold this level, then we're likely going to plunge down to the 60,000, 70,000, which is where we consolidated for 8 months last year, right? And I said this was bad because we spent so much time consolidating here that in theory, if this is a strong bull market, we should not be revisiting places where we consolidated for a long time, right? If the bulls wanted to build a strong case for why we should be pushing higher, then they should be defending this level from falling back into. They should be defending the price from falling back into a level where we spent 8 months consolidating and trying to build support, right? So this is why I say it's very crucial that we hold 90,000. But unfortunately, we broke and fell down and hit the 200-day moving average, right? Where we are now, right? And 200-day is usually a strong long-term moving average, and the price definitely is reflecting and respecting that, right? We first came down, Bitcoin first came down, hit it, the 200-day, defended that level, right? You can see the long wicks, we closed above it, but unfortunately we closed below, right? And now we're sort of like trending, creating this sort of like ascending triangle pattern. You see how it's making higher lows, but it keeps hitting a certain resistance, which is 200-day, right? That just shows that the bulls are respecting the resistance area of the 200-day, but they really need to have more conviction to push the price higher, right? And defend this level. Because if we don't hold the 200-day, the longer we stay below the 200-day, the stronger the resistance becomes, which means that it's more likely we are to push down lower into the 70,000 range. Again, we don't want to revisit this level because we spent 8 months building support, and if we come down, it just is more bearish for a long-term trend, right? So, and of course, we have a cross of the 50-day moving below the 100-day, which again is not really great, but there is some optimism, right? We are very close to breaking above. We already oversold on the RSI. If Bitcoin is able to push up higher, then of course the first level of resistance will be the 90,000 range, right? And if we can break through that, 95,000 will be strong resistance, right? Because we spent a lot of time holding the 95,000 range before like just plunging, right? Now, of course, it's not just Bitcoin, it's fault by itself. There's been a stock market pullback. This is the S&P. You see nice pullback below the 200-day moving average. Why is this the case? Because several factors, right? The first factor is President Trump putting on tariffs in Mexico, Canada, China, right? And he keeps increasing the tariff percentages, right? And slapping them tariffs on. And then those countries are retaliating too. So that's going to eat into companies' bottom lines, right? And that's why the shareholders, investors have been selling because the stock market is forward-looking, right? So they sell ahead of what could be potentially bad earnings. And of course, Q1 is coming to an end. So we're going to see earnings in April. So that might be reflected not only in the earnings, but also in forward guidance, right? So a lot of investors are just selling ahead of what could potentially be not so favorable earnings, right? Other potential headwinds that we're seeing why the prices come down is, of course, CPI, right? CPI has been a bit elevated for a while. So you see September to January, we saw the inflation rate rise, right? But recently we saw the inflation rate actually come down for the first time in a while, which is good, but there's still not a lot of certainty as to whether this trend will continue or whether this is just a temporary like reprise before it goes up higher. So we definitely need to see more data points. So the next report is going to be on April 10th, and we definitely want to see this come down, because if it doesn't, then the Fed will likely either at best pause rates, which is what they did this week, or they might even raise rates, which is worse for the risk on assets like Bitcoin, right, and stocks. But the general consensus is that the Fed will likely cut 2 more times this year, unless the CPI comes down closer to 2%, which is the Fed's target, right? If it does come down to 2%, then they will likely open their mind to cutting more, or maybe cutting at a larger magnitude, right? But for now, CPI remains a focal point for many investors, as it seems to be stubbornly high, and instead of falling closer to 2% target, right? Other headwinds are, of course, it's something I talked about constantly in last couple videos, the yield curve uninverting. Usually that's followed by a recession, right? 2 and 10 year treasury, all the way back to the 1980s. You can see the trend. And now we're uninverting. That doesn't mean we're gonna have a recession like next week or whatever, but it does tend to follow after a certain period after it crosses uninverts. It's usually followed by a recession on record, right? Second thing is, of course, the Fed cutting rates is usually followed by a recession. Usually the Fed cuts rates when the economy isn't doing too well because they want to stimulate the economy, right? And now they're sort of like going through their process. Now they did pause recently, but if they do continue their trend of cutting, that usually is followed by a recession, right? Even though that cutting rates is generally seen as a stimulus for the markets to go up higher, right? But right now, I would say that there's three main things, right? Obviously, what we just talked about, CPI, inflation, want to get that under control. The second thing is Trump's tariffs, right? If Trump, right now, a lot of people believe that Trump is using tariffs as a negotiating tactic, right? So if he does take the tariffs off soon, then this could be a catalyst for the stock market to go higher, right? And of course, this will be reflected in the price. Other risk-on assets like Bitcoin will likely go higher, right? But if he keeps those tariffs on, right, for a long term, that could be bad, right? That could be a headwind for the market to continue either lower or at least like below its all-time high, right? The last thing is earnings, of course. A lot of investors, like I just said, they're selling ahead of potentially bad earnings or potentially get bad guidance, forward guidance, and that could keep the market prices depressed, right? And of course, Bitcoin tends to follow the market, especially the Nasdaq, right? A risk-on asset. So this could keep the price of Bitcoin lower if the stock market isn't able to push up higher, right? So those are the three potential headwinds, along with the recessionary headwinds, potential recessionary headwinds of the yield curve uninverting and the Fed cutting rates, right? But let's look at the weekly chart. Weekly chart structure still technically looks good, right? As you can see, generally speaking, the silver line, the 50-week moving average, that's a strong and important level to hold as support. Once we break it, we tend to fall into a bear market. Now, the last time we retested that was last year in September, right? Where we consolidated for 8 months. Again, I said we consolidated, built a strong base of support to push off of. So we generally don't want to come down to this level because that shows weakness, right? That's not bullish. So we're coming down to retest this 50-week moving average now. And the big question is this going to hold? Or are we going to plunge down? Because if we plunge down, it's just going to follow the same pattern as we saw in previous bear markets, right? This is the last cycle. And here's 2017 when we broke below and we just kept falling, right? So definitely it's important to hold the 50-week moving average. And this is one of those things where it'll take some time for us to see because it is a weekly chart. It'll take a couple weeks for it to play out. But monthly chart still looks good, right? We're still in a secular bull market from, over 10 years ago. So yeah, things are looking pretty good. I will say that the RSI, if you look at the RSI, it is at just below 50. And usually when it's below 50 in the weekly chart in a bullish market, right, that's usually a good time to buy, right? You can see here, so here, again here, and potentially here. This could be, if this is the bottom for this intermediate move, this could potentially be a bottom signal if you're looking at RSI as a point of entry, right? But again, we have a lot of work to do. And yeah, a lot of it is going to determine on what the stock market does. But I will say the big news this month was, of course, the strategic Bitcoin reserve. We got more clarification on that. They actually held a meeting at the White House where the president was there. He attended and he said that there's going to be a separate strategic Bitcoin reserve. That's going to be the main focus. And they're doing a study now. They're doing like a study as to, before I say that, they're using confiscated Bitcoin from criminal trials, right, that they've gotten. That's going to be like the basis for the stockpile. But the market kind of like reacted negatively because there was no indication that the president would actively be buying Bitcoin, although they are setting up a team to sort of look at the potential options as long as it doesn't add to the deficit, right? As long as it's, as they say, like budget neutral, right? So people are thinking, okay, well, they're going to take the Saylor playbook, MicroStrategy, where they like issue like Bitcoin bonds or whatever, like, or maybe they'll sell some of the gold, the Federal Reserve's gold, to raise funds to buy Bitcoin, right? We don't know yet. They're still they have their own committee and they're going to analyze potential options and they'll come back with a report later this year to the president and we'll see if they have an active strategy to accumulate more Bitcoin, right? Besides just holding the ones that they confiscated in criminal trials. If they do have an active plan to buy Bitcoin, there's many speculating as to how much Bitcoin they would buy, maybe like 1 million, and how that would drive the price up. But if they do to come back with a plan to buy Bitcoin actively in the open market, that's definitely gonna drive the price higher, right? But let's look at some longer term indicators, right? Here's a 2-year multiplier. These are charts that I've been looking at for over a year now. Usually below the green line is usually a good time to buy. Above the red orange line is usually a good time to sell. Right now, the price action seems to be in a it seems to be in an area where in the past is in the mid cycle, right? We're in the mid cycle of a bullish uptrend, right? So of course we're nowhere near anywhere oversold, which is like this upper trend is like 276,000. So this potentially tells us there's a lot of upside left, and yeah, we're still in the middle of a bullish uptrend. The Pi cycle top indicator is my favorite sell signal. It's been pretty accurate by price. The timing isn't always right. Like last cycle, it told us to sell in April versus November when it actually topped. But in terms of the price, it was only off by a couple $1,000s. So it's pretty close, right? It's pretty accurate. Right now, we're nowhere near that posture. And by the way, this sell signal flashes when the orange line crosses the green line, which we're nowhere near, right? This looked very similar to where we were in the middle of previous cycles, right? But I will say that right now, it does seem like we're going below this orange line, which is usually like we want to stay above that orange line, right? In a strong bullish uptrend. And we want to usually when we stay below the orange line too long, that usually happens during the bear market, right? I'm not saying this is a bear market yet, but yeah, we generally want to stay above that orange line, right? But the most important thing is that this price action, that structure looks very similar to previous mid-bull cycle runs, right? So we're called the equivalent of like 2017 to late 2020, right? Though we're not over the green line yet, right? And when we're over the green line, that's usually when you want to be getting ready to sell. Price forecast tools combines all these other potential top and bottom indicators into one chart to give you, overall bigger picture of where the potential top and bottom could be, right? So again, this is another chart telling us that we're in the middle of a bullish cycle, and yeah, we're nowhere near a top signal, right? We're not touching any of these lines like we were in the last cycle. I think the lowest line is, let's see, around $200,000, right? So are we gonna go $200,000 this cycle? That's pretty good. I mean, that's like that's more than 100% increase from the price where we are right now, right? So just to summarize, things look really. It looks like we're still in the middle of a mid-cycle bullish run. We haven't topped out yet, in my opinion, but there's potential headwinds, right? Like I said, the Fed cutting interest rates, and the 2 or 10 years when uninversed, we tend to be followed by a recession, right? It doesn't mean it's going to happen now. It could actually follow just in line. If there is a 4-year cycle in 2026, we're supposed to have a bear market. That could be the official recession on record, right? But again, other things that we have to look out for in the traditional markets, we want to see CPI come down, right? Is the Fed going to cut more than 2 times this year? Well, it depends if we see it come down, if we see inflation come down to closer to 2%, right? Other things is, of course, Q1 earnings for the stock market, right? A lot of selling ahead of investors are predicting that potentially the tariffs are going to eat into the bottom line, and potentially this is not going to be as great for guidance, right? If Trump keeps the tariffs on, and of course the tariffs, right? If Trump takes some of the tariffs off, or he at least like takes some of the pressure off, right, lowers the percentages of the tariffs, that could be a tailwind that pushes the price higher for the stock market, right? And of course, Bitcoin should follow as a risk-on asset that follows the stock market, especially NASDAQ, fairly closely, right? So what are my predictions for April? I think that there's a lot of things, of course, with inflation, Trump tariffs, and also the Q1 earnings that are going to affect it. But in terms of just the technicals, we want to, at the bare minimum, hold the 200-day moving average, which we're just about under. If we're able to hold the 200-day moving average, I think that the next stop is 90,000. And this is going to be a pretty difficult resistance level to break, just because we held it for so long before breaking below. So I think there's going to be a lot of bears who are going to try to test this level by selling, shorting at this level, right? The next level is going to be 95,000. Again, this is the level where we trended for a while, for about a month in February, before plunging lower, right? So 95,000, but if we get able to break 95,000, then of course this next Fibonacci resistance level around 100,000 is going to be strong resistance, right? We tried 2 times to stay above, but we failed. So that's going to be a third strong resistance level. But again, right now, what I'm looking for is just to, at a bare minimum, hold the 200-day moving average, which is, of course, this blue line. If we don't hold this level, I'm not too optimistic. I think that we'll likely plunge down to this level that we spent most of last year, 8 months, literally 8 months, trying to defend this level, and that's just not going to be great, right? That's, to be frank, that's bearish, right? I mean, there's really no way you can say that's bullish. We spent so long trying to build a base of support, and we're not plunging back into it, right? That just shows that there's just too much selling pressure and not enough conviction from the bulls to defend this level and push the price higher, right? So again, what I'm looking for April is I'm looking for us to defend the 200-day, move up, and eventually, and that might take the rest of the month. It might take the rest of the month of April, because we spent so much time trying to stay above 90,000 and we failed. It might take us an equal amount of time to defend this level. But I did say on my Twitter page or my X page, EddieLux_, that I do think Q2 is going to be the time when we start to push up higher. Now, I will be the first one to admit I did not expect it to plunge this much. I thought we were going to hold 90,000. So I'll be the first one to admit that I was wrong about that, right? I thought we were going to at least hold the 200-day, not go below it, right? And right now we're below it. But I do think that Q2 will be a little bit better, and we'll probably consolidate a little bit more before pushing up higher and trying to break through the 90,000, 95,000 level, and of course retesting 100,000. And if we're able to defend that level, and of course if there's better news that comes out of the traditional markets, and if the stock market is able to reclaim all-time highs, I can actually see Bitcoin reclaiming all-time highs by the end of Q2, right? The end of June. But again, we want to take it one day at a time. I'll definitely update you guys going forward based on the data that comes out over the next month. It's going to be a big month next year, right? Earnings report and a lot of political headwinds, potentially, or tailwinds, right? Depending on what develops going forward. So thank you all for watching this video. If you found it helpful, useful, and informative, please like this video, leave a comment below, and subscribe for updates. Appreciate all your support. Thank you again, and have a great day.